This is Robert Kraft, and I'm coming to you live on SNN Live, and we're at the Precious Metal Summit 2019 in Beaver Creek, Colorado. With me right now is Mike Hodgson from Serabi Gold. It's a publicly traded company. I got two symbols for you, SBI on the TSX and SRB on the London Stock Exchange. Mike, welcome to SNN Live.
Thank you very much. Glad to be here.
Glad to have you. So for our audience, let's start off with an overview of the company, and then we'll go from there.
Okay, well, we're a gold mining company in northern Brazil, in Pará State. We've got a 40,000-ounce high-grade mine, which is in production, generating positive cash flow. And we've actually just taken, about 2 years ago, we purchased a very similar deposit, which is going to be another sort of deposit, almost a mine pretty much the same as what we are. So we're going to double our production from 40 to 80 and maybe a little bit more. They're both high-grade vein mines within 200 kilometers of each other. So it's a nice little growth story. And you say we're high-grade is definitely our motto. That's what we do.
All right, so let's learn a little bit more. But let's start with the history. When did it start, and how did you develop to where you're currently at today?
Interesting story. It was originally a private Australian producer back in sort of 2003, 2005, 2008 period. The mine got into a little bit of trouble chasing scale to appease sort of shareholder expectation, as many a case. So it lay dormant for about 5 years. We came in as a second time around, reopened the mine, a brownfield mine site, put it back into production, went back to selective mining, got the grade up to 8-9 grams per ton. Generated positive cash flow quite quickly, and we're just accumulating cash now. And then obviously about 2 years ago, we bought another deposit very nearby called Coringa from Equinox, or Anfield as it was then, one of Ross Beatty's companies. It's another sort of small high-grade mine, which probably didn't really fit into his sort of plans. It was a bit small for them, but it fits with us. We've got a 50,000-ounce mine in production. We're going to have another sort of 50,000-ounce mine to come into production. So it's a nice little sort of regional growth story.
And Mike, let's learn about a little bit of the economics behind some of the mines that you have in production right now.
Well, it's 40,000 ounces. It's about 500 tons per day, so it's very sort of small, high grade, grading at about sort of 7-8 grams per ton. We've got an all-in sustaining cost of about sort of $1,000 an ounce. It's a little on the high side, but a lot of our costs are fixed, and that's why actually getting another mine in production is really key. It's going to bring that all-in sustaining cost down. At the end of the day, we're high-grade selective mining. That's not the cheapest mining. It's underground, so therefore it's small tonnage and sort of not very high tons per man per shift, but it's quality, and it really works for us being quality where we are rather than quantity. We're in a part of Brazil that's it's got evolving infrastructure. It's getting a lot better, but the power there isn't the best, and we do actually have to supplement the grid power with diesel. It is a bit expensive, and also we're in the middle of the Amazon, so obviously environmental footprint is important. So small works, you don't demand much power, and therefore you don't need you don't leave a big environmental footprint. So it's a sort of deposit you can actually run with diesel, which we do. And so quality, high grade. That's what we do.
So I also have to ask, in Brazil, I want to know about the geopolitical situation down there. How's that affecting the company?
Well, I would say, obviously, a new president. He's certainly, I think for us, he's been good. He actually has certainly cut through a lot of the bureaucracy and certainly some of the agencies. Like we have a number of regulatory bodies there that are actually either sort of INCRA, which are the land registry, and the environmental agencies, and getting permits done quickly and getting them quickly has always been a problem. There's a lot of bureaucracy, and he's really cut through that, and we've seen a real improvement in the pace at which these things are actually done. So no complaints there. I mean, there's obviously still some challenges there, but it's certainly, I would say it's much improved under him.
Got it. And again, what's your background? I mean, how did you come into all this?
Well, I'm a mine geologist by a long time ago. I've not been doing mine geology for an awful long time, but actually these deposits are very geologically controlled, so I do rather like going to site and getting stuck in. I must admit, I'm a bit of I definitely do enjoy that. I joined the company about 9 years ago as on the board, a technical director, and basically I replaced the CEO in 2010, 11, and I've been with the company ever since. So we put this mine back into production. We're now building the second mine. We're going to enhance the production a little bit more, and we put a PEA out on our new deposit, our new acquisition just on Friday last week, and very nice set of numbers. And certainly these gold prices, particularly in Brazilian reais, record high prices, 6,200 reais an ounce. So our margins are great. Our costs are like 88% in Brazilian reais. So, and we're selling our product in dollars. So obviously that's really working in our favor. It's not always been like that. We've obviously sometimes had some tough times, but certainly at the moment it's a great time to be a producer in Brazil.
And then from what you can tell me, what are some of the company's value catalysts for the rest of 2019 going into 2020?
Well, permitting really is the key one. We're in the final stages of getting our first permit on this new acquisition. That's going to be great, and we've already got the mining permit. We just haven't got the permit to actually construct the process plant yet. But we're going to start the mine early, get underground, and build up a stockpile, and we think we can actually enhance the PEA we've already done with a better mine plan and improving the economics a little. And over at Palito, which is our current operation, we've actually just, it's a good technical advancement, we've actually just purchased an ore sorter. That's a very clever piece of equipment that can actually, one of our big challenges, we're mining very narrow, high-grade veins. And we do actually get a lot of granite waste rock inside unavoidably into the feed, which with a plant limited operation, that's a problem. So we're going to put in this, we bought this ore sorter for a lot of test work, and that'll be coming into production and working in January. So we're going to see, we'll be able to eliminate a lot of the waste and increase the grade, and again, emphasis, quality ounces.
And where can our audience go and find more information about Serabi Gold?
Okay, we're www.serabigold.com. Ticker is SBI on the TSX and SRB on the AIM.
My name is Robert Kraft, and I'm coming to you live on SNN.Live, and we're at the Precious Metal Summit 2019 in Beaver Creek, Colorado. With me again has been Mike Hodgson from Serabi Gold, publicly traded company, two symbols for you, SBI on the TSX and SRB on the AIM. Mike, thank you again for joining me.
Pleasure. Thank you very much.